This is Scott Becker with the Becker Private Equity and Business Podcast. We record regularly short business episodes, short private equity episodes, interviews with business and private equity leaders, and sometimes relatively irreverent or relevant episodes, depend on what the day is. Today's discussion is BlackRock versus Blackstone, the three PE fund families, the five largest market cap companies, and rent control. So here are some of the things that are going on today that we'll talk about. First, Blackstone versus BlackRock. Blackstone's basically a money manager, a wealth management firm. It's not an alternative asset firm. And to talk about how much that business is a commodity business versus the private equity business, you just have to do sort of the numbers in this. BlackRock has about $10.6 trillion in assets under management. Blackstone has about $1 trillion in assets under management. Again, BlackRock is, general mutual funds, money management, traditional money management, trying to be a little bit more in the private equity business, but really not. It has 10 times the assets under management as Blackstone. Yet Blackstone has a market cap of about $160 billion. BlackRock about $120 billion. And that's about all you need to know about the relative value of these two businesses. And one of the things we're watching is more and more of people trying to roll up money management firms. We're seeing a ton of it in our area, in our world, not so much necessarily the private equity and private debt world, though there's a ton of that roll-up stuff going on as well. But in the actual money market or money management world, a ton of roll-up activity going, and we'll see how far that goes. So that's story one, Blackstone versus BlackRock. The third thing I'll talk about is the three biggest PE funds that are publicly traded. Of those, Blackstone's the largest with 160 billion in market cap. Number two is KKR with 105 billion in market cap, and number three is Apollo Global Management with $70 billion in market cap. Interesting enough, KKR is up 39% year to date. Apollo's up 31% year to date. Blackstone's up just 1% year to date. Gets harder and harder in a tougher and tougher business, which is the private equity business right now, to keep on knocking out of the park. But again, Blackstone is the leader of the three, at least currently. The third thing I'll talk about is rent controls. One of Joe Biden's ideas this week is that you cap annual increases in rent by 5%. And again, particularly by larger landlords, this is one of the worst ideas I've ever heard. What happens is whenever you start to impose rent controls, you further mess up a market that is supposed to be not messed up. So what happens is if you don't have rent controls, ultimately more builders build more units because they can get rents they want to get. If you start to put in rent controls, it ends up exacerbating the problem we're trying to solve, which is an imbalance between supply and demand, because less people end up building units, growing units, turning units into apartments, doing all kinds of things with apartments. So you end up in a situation where you end up with less units for more people, and then the rents get exasperated versus control, but it's a rent control concept. It's very similar, and this will be a stretch to some people, but it's completely true. On college campuses, many of the very progressive administrations became very anti-sorority, anti-fraternity. And this seemed like a good thing at taking shots at the elites that are in fraternities and sororities, all that kind of stuff, all that populist gobbledygook, no offense to anybody. And what essentially happened was you had just as many people that wanted to join fraternities and sororities, but a lot less fraternities and sororities. So the competition for those, the elitism that you were trying to protect against, got worse and worse and worse. Similar thing happened in sort of rules on checking on the inability to evict tenants in New York City. The city, in trying to please the populist movement and please the people that are being evicted, made it very hard to evict tenants. So you think, oh, that's good. People can't get evicted. This is terrific. And so the actual thing that happened was they made it very, very hard. Landlords made it very, very hard on the front end to rent a unit because they didn't want to take the chance that they'd be stuck on evicting you going forward. In any event, the point of this all is this idea that Joe Biden is supposed to pronounce today on rent controls and limiting rent increases is again one of the dumb ideas of our time, and just it's another sop to sort of a progressive agenda that's just a horrible idea. And it's certainly not that the conservatives have everything right. They certainly don't. I saw sort of J.D. Vance's discussion last night with Sean Hannity, and some of his talking points were so bad it was embarrassed for him, even though he's a really, really, really bright person. And then the fourth story I'll note today is the five biggest companies by market cap we're back to seeing movement here. Apple's back to number one. Microsoft is number two. NVIDIA is number three. Google is number four, and Amazon is number five. Tesla, which we follow all the time because it's fascinating, is right at 800 billion in market cap, and it's number 10. It's had quite the rebound, quite frankly, over the last few weeks. In any event, thank you for listening to the Becker Private Equity and Business Podcast. It's always great to visit with you. Thank you so much for joining us today. Always free to send us ideas. 773-766-5322. Thank you for listening to the Becker Private Equity and Business Podcast.